Hello, YouTube. Look, it's really important that whatever we do on this current uptrend, we want to be aware of it for the next little bit because every time since late May we touched this line or the green uptrend, we bounced. So right now, what do we have so far? Well, we have a lower wick or a bounce exactly off of 435. If you've been following this channel, you know that we look for the point 0.1 area to get bid up if we're going to be getting a reversal. Well, that is exactly what happened here. However, what do we have? We have an upper gap on the S&P. It's not a big one, but we still have a lower gap as well. So because these two things are currently playing out, we want to pay very close attention. I'm going to bring back all my lines now, and I'm going to say that because it appears like we're climbing a stair step here. And with the first day after OPEX or quarterly quad witching expiry, which happened on Friday, the first session, there is potentially going to be a next 30-day, a 3-month or 90-day move underway here. What are we going to do on this gap? And we're going to do what QQQ did, and QQQ hit it and backed off. So QQQ hit its upper uptrend and then backed off. Hit the gap fill and then backed off a little bit by about 50 cents. If we look over here to DIA, what do we have? Well, we got a little bit of a bigger hole left. So whatever the S&P does is going to be important because Jerome Powell starts giving testimony tomorrow at 10 a.m. And then the next day, on Thursday, he also gives another day of testimony. So what's he going to say? Is it time to go up or buy the dip? Is it time to go down or sell the rip? And I think it's going to be very important because I think a lot of people might forget the connection between the Fed and the stock market. The blue line, or Jerome, and the green line, the S&P, is pretty correlated here. Blue line goes up, green one gets dragged up. When the green line gets above the blue line, like we did in November, like we did in March, like we did in July of 2022, what happens? Well, market goes down. Okay, cool. So that seems like really simple. Well, isn't that what we're doing here? The green line is above the blue line. This just shows QE, or basically Fed printing, since the beginning of the lockdowns in March of 2020, almost 2 years ago. We also have a slight tick down on the fear and greed today to about 79. And what's working today? Well, what's been working for the last 3 months or more window dressing? Tesla, NVIDIA closing at a record, right? It up another 2.6. Tesla getting news about Rivian charging station being added after Ford and GM. Hey, market looks a little bit interesting. We also note that we had some negative news, while perceived to be negative news out of China. This chart is really gappy. There's gaps like everywhere in here. It's just sloppy. But here's what I don't like about this one. I'll show you what I like, and I'll show you what I don't like. I can see a very clear area for us to establish risk right here. But what I don't like is the gap down and then the flush. And this happened because China cut their key interest rate, but not by as much as what the market was expecting, which led to a decline. And there's just less stimulus than what we thought, which means sell it. Even after we saw Bill Gates meeting with Xi Jinping over the weekend, and then Anthony Blinken also had a meeting. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thanks so much. Well, the reason why I don't like this is because this is the first day after OPEX, which means the first day after options expiry or the first day after payday. And what do we note? Well, almost everything's red. We got... Well, take your pick here. We got the equal weight down with a big gap. We talked about that gap on the Dow. That's a pretty big gap. We got a gap, red on the Dow, red on the Russell, red on chips, red on ARK. We're down by 3% for energy, right? Relating to China. FXI down by 4%. EEM down by 2%. If we look at the DAX, down by 0.5%, gap filled. So as we're focusing on Jerome into the next 2 days, I really, really, really want you to pay attention to two things here. If we stop going up, again, please drop me a comment and remind me, what do charts do? They only do one of 3 things. Hopefully you're going to know what it is. I'll give you the cheat code right now. It's going up, it's going sideways, or it's going down. So clearly right now we're going up on our current uptrend. Well, what if we don't hold this apex, which goes into Thursday, or the day that Jerome Powell talks? If we're not above 440, what does that mean? Well, it means, first of all, we're red on the week. We look at our weekly chart. We closed Friday out at 439.46. Anything below 440, that's red on the week, which means we're not going up at this angle of ascent or this trajectory or this angle. That's all it means. So if we stop going up, what are we looking for? Well, we're looking for 432, which is going to be a really important area. I'll show you here in the weekly chart why. So the first reason why is because that is our August high going back to August of 2022. Additionally, it's also going to be our top from the week ending July 9th. So if we fall back below here, it also gives us the potential to crack and form a weekly lower low, which we've not done through this expansion, which we're looking at on that daily chart. So after 432, what is the most important level after that? Well, it's 422. Sorry, 422, which is going to be the monthly failed breakout, which means we're going to basically fall back below here. We're getting into the last third of the month. Bears would have to stomp this thing down below 422. Maybe Jerome tomorrow is going to be the catalyst. I've been hearing a lot of reasons why we should be going down for a while. Maybe this is finally it. Maybe it isn't. However, if we do go down, there is that daily gap fill, but there's also the monthly higher low at 404. That is a lot lower than where we are right now. That is 33 points lower. If you're not ready for that, you better make sure you know what's going on here on this daily chart. So we talked about that gap on QQQ. Actually, let's look at it now again briefly. So here's what I'm not sure S&P is going to do. Is it going to do what QQQ did, where it hits the gap and then backs off? It filled the gap. That's the first thing I would know. If we look over here to the Dow, there's a gap on the chart. So is it going to leave this gap like the Dow? Is it going to not? This is very important because we're seeing some chips being taken off the table. It's not a sell-off yet. It's just a big test. So right here, every time we've touched this uptrend, we've bounced. We found buyers. Well, we found buyers again today. Where? At exactly 435. So if you've been watching this channel for any length of time, you know that we generally look for that 0.1 area for the bounce between the round number and that 0.1. We go back here to our October low, 348.11. We look to our low going back to March, 380.6, pretty close. And that's generally how these bottoms get formed here. So now that we're really close to that area, what's going to happen? 435. If we print that lower tomorrow, it means there's some kind of negative reaction on Jerome, which is a very big clue for me. So whatever we do here, really, really important. Next thing I want to look at is just the performance. So we note that NVIDIA and Tesla are doing really well. Well, they've been doing really well for the last 3 months. So that I believe that window dressing is still in play, which right now the market looks like there's a lot more green on the screen, which is great for the bulls. And if we can just go sideways for a while, that would be very healthy. So if we can go sideways, that's great. If not, remember what we talked about on the weekend. It was the bullish narrative in the story. So what I would expect if these bulls are still in control is exactly what happened the last time. What I would expect is this. I would expect that as the gap gets filled, boom, buyers get found immediately. Here's what I want to see from the bulls. I want to see the bulls get us green on the week. That 435 is the buy, which means we fill the gap. Maybe we back off like QQQ, but then we go higher. We form a daily higher high into Wednesday, but also into Thursday. That's very, very important. It signifies that the gap's been filled. We're moving to the upside, which means we're grinding higher on the weekly. Expansion continues. The bear fueled rally keeps going on. And that's what I want to see by Thursday and Friday, which is why we have that apex. For the bears, all we want to see is that we're below, we're red on the week or below 440, basically 439.50, we'll call it that, by Friday, which means that could be the start of a move lower. Why could that be the start of a move lower? Well, let's look here. We talked about 432. We have that area here on the daily chart. We talked about 422. There's a daily gap here. So if we fill that daily gap at 422, it means we're testing the May high. That is very, very important. Then we also talked about 404. Why is that important? Well, if we look here back to our dominant uptrend, so we note that we have different angles of ascent. Our lower uptrend, or our home base, what I like to call it, just shows us that we're going higher at an angle that is easier to hold. If we stop going up at this angle of ascent or this current uptrend, where would we find support? Well, right now, that's at 404, 405. So if we crash land all the way down here on our monthly chart down to 404, which would still be a buy, that's where you want to be a buyer. And we have a lower gap down here too if we keep cutting. So what's the tail sign for me that we're going to get that? Since you've hung around this long, I'm going to give it to you now. It's I want to see two things. I want to see the leaders continue to lead. That means NVIDIA, higher highs, higher lows, record close, record high today. Apple, where is it? Not quite in record territory, but it's pretty close. It's right around that high, which was a new all-time high, which we established going back to WWDC at around 185. I want to see Apple join the party for NVIDIA going to new highs. And then I need, again, not want, but need to see names like Microsoft actually grinding higher. That 335, I believe that is a monthly area. Yeah, it's an annual area. So on the 12-month chart, really important here at about 336. Let me just double check that. Yeah, about 336, the low that we bounced off today, roughly. So we need to see Microsoft join the party for the upside. Otherwise, if NVIDIA and Apple start to fall, so if these stocks fall lower, start losing their relative highs, for Apple, that's right around 185. For NVIDIA, that's 419. That could be where we start to look for these gaps to get ultimately filled. So with that said, I thank you so much for watching. I've left the weekend video queued up over here on the left-hand side where we talk about my deeper thoughts on what I thought would happen this week. And now you can see that's currently unfolding. If not, thank you so much for watching. I look forward to seeing you tomorrow. Thanks again.